India is right in the middle of one of the biggest economic shifts we've seen in modern history. And smack in the center of it all are companies like Prudent Corporate Advisory Services. So today, we're not just looking at one company's strategy. We're using it as a lens to understand the incredible opportunities and, yeah, the hidden risks in India's financial future.
Let's start with just one single staggering number, 112%. By 2047, that is the projected ratio of mutual fund assets to GDP in India. Right now, it's sitting at under 19%. I mean, that's not just growth, that's a nearly six-fold explosion of the entire market. This is the massive wave that a company like Prudent is built to ride. The big question is, can they stay on the board?
But explosive growth always comes with growing pains. And that brings us right to the core question of this entire explainer. In a country that's literally on the verge of a wealth explosion, how does a key player like Prudent deal with all the inevitable challenges, from sudden regulatory changes to fierce new competition? Let's dig in.
All right, Section 1, the big picture. Before we can really get into Prudent, we have to understand the powerful currents they're swimming in. I mean, what's really driving this whole financial boom?
It's really a perfect storm of three major forces. First up, you've got the demographic dividend. By 2030, we're talking more than 1 billion people in India will be of working age. That's a huge engine for savings. Second, the urban surge. By 2036, cities are going to hold 600 million people and generate 70% of the GDP. And finally, inflation is cooling off, which always makes investing look a lot more attractive. So what's the key takeaway here? The stage is set for wealth creation on a scale we've just never seen before. So, for our second section, let's check Prudent's pulse. With that incredible economic wind at their back, how is Prudent actually doing? Let's take a look at their Q2 report card. Their Q2 results are a classic mixed bag. On one hand, revenue is growing, and this is important. They added about 1,000 new distribution partners. That's absolutely key to their strategy, and we'll get to why later. But on the other hand, you can see two clear pressure points. Profits aren't quite keeping up with revenue, and their insurance business got squeezed by a tax change. Let's unpack that profit number first. Now, this is where it gets really interesting, because it shows you the story behind the numbers. The reported profit, it looks a little weak, right? But that's because of a one-off provision of 4.3 crore rupees for commissions. Once you adjust for that one single item, the profit growth actually lines up really nicely with revenue growth. It's a classic case of why you've got to look beyond the headlines. Section 3. That GST issue brings us right to the major challenges. See, growth in this space isn't a straight line. It's more like running a gauntlet of regulations. And right now, Prudent is facing two big ones, that GST impact and some proposed rule changes from India's market regulator, SEBI. This chart really shows you just how hard that GST change hit their health insurance business. A full 70% of it was affected. The problem was a change in how the tax is calculated, which in effect cut their revenue by 18% in that specific area. That is a direct, significant blow to what was a really promising growth area for them. Okay, so let's talk about the other headwind, this one from the regulator, SEBI. This is all about something called the total expense ratio, or TER. Put simply, this is just the annual fee you pay when you invest in a mutual fund to cover all its costs. Any little change to the TER has a massive ripple effect through the entire industry. So as you can see here, SEBI is proposing three key changes. They want to change the math on how taxes are included, remove a small benefit funds used to get, and lower the cap on brokerage costs. The bottom line here, it could squeeze the total fee pie by about 6 to 7 basis points. Now, a basis point is just 0.01%, so it sounds tiny, but when you're talking about billions in assets, it adds up to millions in lost revenue that has to be absorbed by everyone, including Prudent. So now we're at Section 4, the Prudent playbook. Okay, so you're getting squeezed by taxes, you're facing new regulations. How do you fight back? What is Prudent's actual strategy for navigating all of this? Well, their history shows a very clear pattern of adaptation and smart growth. From their early days to the game-changing launch of their digital platform Funds Bazaar, all the way to a series of really smart acquisitions that beefed up their market position. This is not the first time they faced a shifting landscape, and their track record shows they know how to be resilient. This quote, this gets right to the heart of their competitive advantage, their moat, so to speak. New competitors are popping up, trying to lure away financial distributors with bigger commissions, but Prudence management is making it clear. While they might lose some smaller partners, their top 10%, the folks who bring in the most business, they're loyal. That deep relationship is their best defense against the competition. And the data totally backs this up. I mean, despite all this rising competition, their network of mutual fund distributors has more than doubled in just 5 years. This just goes to show you the power of their platform and the services they provide. They aren't just surviving the competition. They are actively growing their network and digging their moat even deeper. All right, section 5. Let's zoom out one last time. How do all these quarterly numbers and regulatory battles fit into their grand vision for 2047? Prudent explicitly ties its own destiny to the future of the entire country. They see themselves playing a catalytic role in India's journey to become a Viksit Bharat, or a developed India, by 2047. Now, this isn't just corporate jargon. It's a deep strategic alignment. Their success depends on India's success, on helping millions of households take part in this incredible growth story. And this leaves us with one final, crucial question. We've seen the immense opportunity, and we've seen the very real challenges. So, as India's wealth story continues to unfold, can Prudent use its platform, its relationships, and its resilience to turn today's regulatory hurdles into a genuine competitive advantage for tomorrow? The answer to that question will determine their entire future.